Welcome again to the Big Three Show from Global Money Talk. I'm Tai Wong reporting from New York City. On Big Three, I take a look at the three news stories that I think are important for investors today. If you like the video, please leave comments, subscribe, and turn on notifications. And if there's any topic you want me to cover, please put it in the comments, and I will get to it in an upcoming show. So let's get right to the Big Three today. The first story of the day: the S&P 500 is now officially in a correction. Second story, former Secretary of the Treasury and Steve Mnuchin, in a long interview, says the market just relax. Third story, gold is going for the glory. It should hit 3,000, I think, sometime tonight or tomorrow. And actually, there's a little bit, you get a little extra. There's breaking news. There's going to be no government shutdown. So the first story of the day, stocks tumble into correction. And a correction is sort of a definition that it's down 10% from the highs. And the S&P 500, despite being up earlier in the day with benign PPI reports, that's a producer price index, it finished down 1.4% and down 10% from the highs. Part of that is President Trump said today that making the tariff situation a little bit worse, in response to the European Union putting a 50% tariff on American whiskey, he says if this tariff is not removed immediately, the U.S. will shortly place a 200% tariff on wine, champagnes, and alcoholic products coming out of France and other EU represented countries. This will be great for the wine and champagne businesses in the United States. That is, again, I think this is a credible threat. For France, for their wines. They have some of the best wines in the world. But at the end of the day, if the price of wine goes up 3 times from France or from other parts of Europe, you're going to get a lot more Americans drinking California wine, or perhaps Australian wine, or maybe even wine from Latin America. So this would be quite painful. I expect that there's going to be some negotiation, and somebody's going to cry uncle with 200% tariffs on wine, because there is a lot of wine around. The NASDAQ was down almost 2%, now 13.5% from the highs. The Dow almost 10% from the highs, down 1.3% today. And according to the Bloomberg article, it's saying investor sentiment is souring, even as recent data provided some evidence that the economy remains resilient. The gloom is particularly around trade, and that's rattled Wall Street's nerves. And the firings of federal agencies and deportation threats are making people concerned about labor markets. Just to look a little bit closer into the article, there's some suggestions that we are close to capitulation. And capitulation, what I mean by that is I think we've sold off enough that the market can bounce meaningfully for the first time since about the middle of February when we hit highs. And as an example, the article says some technical charts show the S&P 500 is already oversold. And that's oversold on a technical level. The index's 14-day relative strength index, also known as RSI, is hovering around 30, and that generally suggests that the sell-off has gone too far. Another signal is the bull-bear ratio. That means the number of bulls to the number of bears fell to 0.3. So basically, for every 3 bulls, I suppose there are at least 7 bears, and that's the weakest it's been since September 2022, which was the bottom of that big correction in 2022. The last time the indicator was this low before then was 2009 in the aftermath of the financial crisis, and you'll remember the S&P 500 at the time was at 666 was actually the low, and recently we got up to 6147 was the high. So a big move from 666 is the low. Now, that was the end of the global financial crisis. But let's take a look at the charts. So here's a chart of the S&P 500 in 1 year, and I added some indicators here. Here's the RSI, the relative strength indicator, and it's typically a 14-day simple moving average. You can see the pink line here. We are around 30 and just under 30, and the last couple of times in April of last year and in August of last year, after that big collapse on August 5th when the Japanese raised interest rates, we hit 30 and then on big downdrafts in the market, as you can see here, and then had a nice bounce. Well, does that mean we're automatically going to bounce? There's really nothing automatic about it. It does say that we are approaching oversold conditions. And you can tell we're down 4 days in a row now in the S&P 500 cash. And the market has kind of stopped fighting it. So we're not seeing any more green candles as we had last week. So that's why I'm thinking we are actually close to a capitulation. A couple of things to look at. One is the 200-day moving average. You can see that we haven't been below the 200-day moving average in a year, and that suggests to many market observers a 200-day moving average is sort of the long-term average. We stay above that, it's still bullish. Below that, we have to consolidate and see if we're actually in a bearish situation. For context, let's look at a 5-year, a 5+ year chart of the S&P 500. Again, similar things as the previous chart. Now you can see here that the RSI is not yet at 30, and that's because the RSI takes, in the previous chart, it was a 1-year chart, so it takes 14 days. Those are daily charts. In a 5-year chart, each candle is 1 week. So this RSI becomes sort of a 14-week rather than a 14-day period. So we've got a little whiles to go before we get to this 30 level, which is a little oversold. That's why I think we really do have a little more, another sell-off to come, maybe today or Monday. And just again for context, the last time we were below the 200-day moving average was actually just at sort of the beginning of 2024, and then before that it was really 2022 when we had that big sell-off based on the Fed raising interest rates very, very quickly. So the final chart here, I removed the RSI so we can see it a little bit bigger. We're close. I don't think we've seen a bottom yet. Tomorrow's the end of the week. It's been a bad week. The market's mood is bad. I think we could sell off a big sell-off tomorrow, maybe Monday, and then I think we bounce back towards the 200-day moving average, perhaps for some consolidation. And this is, a technical view. The market is trading on emotion right now. The data hasn't been bad at all. Inflation data was actually decent. The employment data, has been decent as well. So there's concern, but there's no real trouble in the economy, so to speak. That's why I think, down to maybe around the mid 350 or thereabouts, that'll make it about a 13% down from the highs. I think then we can bounce. So let's go to the second story. Former Treasury Secretary Steve Mnuchin, who was Trump's Treasury Secretary through his entire first term, one of the very few cabinet members to last the entire Trump term, gave about a 12-minute interview on Bloomberg today. And I think he's a really smart guy. I think a lot of people think that he was just sort of, yes, he was a Goldman guy, but he wasn't a great Goldman guy like Gary Cohn or Robert Rubin. But I think people underestimate him. And one of the reasons actually is, in addition to being a successful Goldman banker and a successful private equity guy, he also produced a number of quite successful movies. And executive producer, that means he invested in it. And that's a kind of a different skill set to recognize value. Hollywood is a very, very difficult business. I think it was a hobby for him. I think his wife, or his second wife, is actually an actress from Hollywood. I think he's pretty good at that. He had a lot of interesting things to say in this rather long interview. And basically he said, relax. I want to go over some of the things he said because I think it's important. First, he said tariffs are like a consumption tax on foreign goods. And he says Trump is very serious about these tariffs. He added, if we tariff 10% across the board, you're basically going to have a consumption tax, which a lot of people, actually serious economists, have argued for a long time. Why are we taxing saving instead of taxing consumption? Now, as a guide, in fiscal year 2023, I looked this up, the U.S. imported $3 trillion in goods and about a little less than $1 trillion in services. So if you just tax the goods, 10% of $3 trillion is $300 billion. That's a decent chunk, and that's going to help pay for things that Trump may want in terms of the tax cuts that he's looking for. Again, somebody very clever said you should take Trump very seriously, although not necessarily literally. And in this case, according to Mnuchin, he's very serious about tariffs. Regarding the markets, he said, don't overreact. I don't see a recession at all. We will see lower government spending, so that could mean a pullback in growth, but no recession at all. And finally, to where the S&P was, he said we were fully priced, which means all the good news was priced in, and a 5 to 10% correction makes sense. And we've just hit 10%. I think we've got a little more to go, but what he's saying is fundamentally, the world hasn't ended. It's just the market's in a really, really bad mood. He did say also that it is critically important that tax cuts are extended, because if the Trump tax cuts, which are expiring, aren't extended, that's a tax hike on everybody, and that's actually going to be bad for the economy. He sees an extension of the tax cuts. If we get a lot of revenue from tariffs, that might help pay for some of it. Probably a little ahead of ourselves, but that's a good point. He also added the deficit is the #1 problem today, much worse than in 2017 when he said we had a lot more fiscal room and much lower interest rates. And finally, he said long-term treasuries are already pricing 3.5% terminal Fed funds rate. That means the Fed's going to cut to 3.5%. They think the market has already priced that in. And actually, the last thing really is, he says, I like a stable dollar policy, not necessarily a strong dollar policy, but a stable one where, the world can do business, the United States can do business, the currency stays as the reserve currency for the foreseeable period of time. So a really good, if you get a chance to look at it, I would look at this interview from Steve Mnuchin. He says a lot of smart things, certainly a voice of reason. And finally, the third story of the day is gold is close to 3,000. I think it was last trading 29.85 before I started recording, and it's made a new historic high today. Had two very good days. Yesterday, didn't react immediately to the benign CPI, but then there were buyers came in later in the day. And same thing today. When PPI came in, actually soft, gold didn't really react, but I expected it to react a little later, and it did. We got it to new highs. I think we're likely, even if we don't close above 3,000, I think we're likely to hit 3,000 tonight or tomorrow in New York. And the reason really is, if you're worried about the bonds aren't really rallying on good news because we're concerned about the deficit, concerned about tariffs. The Feds may not cut because inflation is not low enough and the employment situation still looks good. So where are you going to put your money? A little trouble in Europe. The Germans might not be able to spend the money they want because the Greens don't want to do it. But so where do you put your money? If not in treasuries, if not in the stock market, people are looking at gold, and gold has done very well, and I expect it will continue to do well. And here's a chart. RSI is a little elevated, but can certainly go higher. I don't think 3,000 is a magic number. I think we get to 3,000. If there's more concern in the markets, I think gold continues to rally. However, if we do get another final big drop in the stock market before it bounces, then you might get a little bit of a correction in gold. But 3,000 is going to get a lot of attention, might get some new inflows, but I don't look at it as really a magic number. And so let's take a look at silver. People are thinking, well, if gold's rallying, is there a lot of opportunity in silver? And silver, always gives me pause. I look at silver as more of a trade than an investment. You remember that silver has become more of an industrial metal than a precious metal. It's used in a lot of industry. There's always talks about shortages coming up, and we're only mining it as a byproduct, so there's no real silver mines. But there's a lot of silver around, and it has some potential. It can be very, very volatile. I always tell the story that in 2011 it went to 50, traded 50 for a day, dropped down below 40 within a couple of weeks, and basically never saw that level again till today. So you got to be really careful in silver. And there's not a lot of interest in it right now. So if you look at the yellow circle, yellow oval here, silver is rallying behind gold, but this is a volume candle chart. That means the fatter the candle, the bigger the volume. The volume has been pretty light on this rally here, so it doesn't mean that I think there's not a lot of interest, and I think it's a trade. You can trade this, but it's going to be a lot more painful than gold when it moves against you. It always has been. And there's a little special today, even though we've gone through our third story. Literally, this came out within the last half an hour or so. Breaking news: the Democrats will not shut down the government. Minority Leader Chuck Schumer, which was as recent as yesterday, said they were going to basically filibuster the continuing resolution from the House and close down the government by Friday. They've decided not to do that. He says, I will vote to keep the government open and not shut it down, adding that a shutdown would give Donald Trump and Elon Musk carte blanche. So I think this is good news. A shutdown, even though most people thought it would not last too long, would make the market even more nervous. And I think at the end of the day, they decided that, it would not help the Democratic Party, even though it will make their progressive side of the party angry. The progressive side didn't do very well in the last election. The Democrats are out of power, and they felt like they would be blamed for shutting down the government. And it's usually the Republicans who shut down the government. It has been true the last 4 or 5 times it's happened. So I don't think they want to do that. So there will be no shutdown. That does it for Big 3 today. Thank you for tuning into this video, and I'll see you again very, very soon.